Are we good to go? We on? We live?
We live. We live.
Come on.
Happy Wednesday.
Hey, this is gonna be a good Wednesday. A long time coming, but we back,
We're
right?
back. Yes, yes, we are.
Good deal. So, hey, so we got an exciting night for you guys. It's Wednesday. We're gonna talk about some wealth, some money, taxes, financial planning. We're gonna do it all tonight. So I'm really excited about tonight. So let's kind of go on into it, right? My name is Christopher Bush, financial advisor.
And I'm Abby, your tax strategist.
Right. So tonight we're gonna have a really good show tonight. What I want you to do before we get started, I want you to, if it's your first time on a Come Up series, right, haven't been to the show before, I want you to go ahead and click that big button on the bottom, like and subscribe. And actually, as we go through the show tonight, I want you to kind of comment, ask questions, those type things, because we're going to be interactive tonight, and especially for our future shows going forward. So I'm excited. Go ahead and key our intro.
That's 100. That's 100.
And we back, right? So Abby, we're gonna have a lot of things covering tonight, right? And this is our intro show, our first show, and I kind of want to get a feel for everybody to let them understand what we're actually going to be bringing to them on these next few weeks, right? I say few weeks, but actually going to be a long-term deal, right? Because my vision is like I want people to get a full scope of what a financial plan looks like, right? And how that looks with you, right? As far as when it comes to taxes and how we integrate things. And we learned a lot about the executive business that Mark has been doing. We learned about trading. We know a lot of things, but now we want to tie it all together, right? So Abby, just kind of tell them what are some of the things that you're going to be covering, as we progress along with our show in these next coming weeks, right? Months, years, right? However long it takes, we're going to make it happen, right? What are some of the things that you want to make sure that people get out of the show that we're going to be hosting together?
Oh, hello, Cuzzos. Welcome to our first show. We are super, super excited that you guys are here. We're so ready to just like blow your mind with information. But the biggest thing we want to actually you guys to come out of our show is not just knowledge, but we want you guys to actually really, really, really be prepared for wealth. In the tax side, we want you guys to be prepared. Wealth in the financial side. This is why me and Chris is coming together to just bring you guys fire. So in my end, you guys are going to actually understand the basic aspect when it comes to taxation and the individual side and the business side and the trading side. And then I'm just going to throw you to Chris. That's the goal. So once I'm actually done with you, I'm just going to throw you to Chris, and Chris is going to actually help you guys create a portfolio that looks like your future. So that's my goal. That's my goal, Chris. And then just to like mess with you.
Always, you always got the jokes, right? Guys, and for me, I'm really, most of my business, well, all of my business, I'm really big on working with clientele, right? So that's where most of my time is being spent. I don't do a lot of stuff on YouTube or even social media very much because most of my time is spent one-on-one with clients, right? And what my vision is, I really want to bring the client experience to you guys so you guys can look into my world on a day-to-day basis when it comes to financial advising, right? Understanding how portfolio management services work. Right. I want us to understand truly how insurance works, how insurance planning works, right? How financial planning works, retirement planning, whether it be college tuition planning. Guys, we got to make sure that we hit all the topics because there's so many things on YouTube that we're talking about different tricks and strategies and loopholes that we can go in the financial industry. But what I want to uncover is when is the right time, right, to implement the different strategies. Right, because I see so much, right, Abby? Don't you see a lot of things on YouTube and social media? Great tax tricks that you can do, or loopholes that you can do, or same thing when it comes to financial advising. There's so many things that, hey, they say, Chris, what about this trust, or what about this plan, or what about this insurance to do infinite banking or cash flow banking, right? How do we construct a portfolio? But guys, there's a time and a place that you need to implement right, different strategies into your financial plan as you continue to grow, right? And I want to take us from the beginning, right, and progress. And I want to hit every single lever. Whether you're a W-2 employee, right, we got to get freedom, right? Whether you're a business owner, right, we got to get freedom. And it's not about just being, you know, I'm not gonna say a small business owner or a big, like if you're in a business period, we got to get you there. Does that make sense? And there's a certain path that we want to take, and we want to educate you guys along the way, you know. And that kind of brings up to the next thing. So tonight we're gonna get the party started, right? We always gotta have some type of guest, right? But it wouldn't be right
on our first show, Chris. You bringing a guest in our first show?
Absolutely, right. It wouldn't be right if for the show that we wouldn't bring on a special guest, right, to help facilitate what we got going on, what our vision is, and take it to this next level. So, special guest, go ahead and pop up on with us, right? Come on and talk to us. Right?
I could have sworn we've been here. Just, wait, how did you guys get in my house? Wait a minute.
What are you doing here? Chris invited you, didn't he?
Yes, guilty.
We had to collaborate on this one, right?
How are you guys doing?
We're
doing good, bro. How are you?
It's our first show.
I am fantastic. You know, normally Wednesdays are like my day off because like there's so much energy that's put in for the show. But yeah, it wouldn't be right if I didn't show up and like definitely show you guys love. So shout outs to you guys for doing the show.
Let's do it, Mark. Look, I thank you for popping on with us, and this is gonna be an awesome journey that we're gonna get started on. So, you know, where should we start tonight, Abby? I mean, where we want to take this?
I think we should actually make Mark our client.
Come on.
You want to actually open the door, right? How financial freedom looks like, how taxation looks like, and kind of be Mark's solution to all Mark's problem when it comes to taxations, when it comes to his wealth. What do you guys think, guys? I mean, let's ask the audience. What do you guys think?
There's a little bit of a lag, so let's see what they throw up in the chat, but it should be interesting. And shout out to the cousins that are watching us on YouTube, as well as the cousins that are watching us on LinkedIn. So we salute each and every single one of you. And I definitely see Jolynn in the chat. So what's up, sis?
How you doing?
All right. So yeah, they're saying run it. Oh, okay. So I'm just gonna let y'all know I am a terrible client. Like, I just want to let you know. So like, I'm always busy. Go. So I'll do my best. Is this like so this is orientation, right?
This is orientation, the intro call. And I kind of want to start out like this, Mark, because I don't know if how many of our viewers have actually sat down with an advisor or had a consultation before, you know, because a lot of times we're talking about, you know, DIY, right? Do it, you know, do it yourself. And, you know, you don't need an advisor, but I'm really a firm believer that it's helpful to have a team, right? It's helpful to have a team to bring everybody together. And one of my things is my first call, when I actually sit down with a new client like yourself, Mark, I really want to know where you're at, right? And I think that's important for going into, I say going into the New Year's. It's already March. Can y'all believe like 2 months have already passed, right?
Can you believe it?
So we want to understand. I always want to know where you at, right? Where do we want to start? Because in order to build a plan, every single person is at a different level of life, right? You're able to save X amount of dollars. You may have some money saved in retirement, right? We want to know what your current financial position is in order for us to build a direction. We gotta begin with the end in mind, right? So we got to know where you're at right now. So one of my biggest questions is around cash flow. Right. When we're looking at, for me, I hate budgeting. This is going to be another one of our shows. How we go. Right. That's one thing.
Man. I love budgeting. So
really?
I love budgeting.
Come on. Go. Well, Abby, look, that's what I probably, out of all the things that I do as an advisor, helping someone budget is probably like the worst part. Right.
Yes. This is when you tell them how to run with their money, how to use their money, how to have a relationship with their money.
Absolutely.
Everything.
Absolutely.
I have a feeling that we're going to have another sermon this evening. So go for it, Abby. Go for it.
We will do, right? So, but even though I don't like it that much, we got to start there. It's so important. So, you know, Mark, as you as a client, kind of give me a overview, you know, of financial situation now. So again, like where do you work at right now?
So should I take myself from who I am today, or should I go a little bit back into time?
I want the old Mark, the new Mark, the old Mark. This Mark is no. We need the new Mark. We want the Mark straight out of college, Mark.
Oh God.
Maybe
Okay.
maybe not straight out of college. He was
I
probably
was like, I don't know if I'm straight out of college.
We'll
right.
give it 5 years. 5
Because I
years.
was definitely on some everyday I'm hustling. But okay, so let's take it from, let's say, because junior year I left Microsoft.
Mhm.
And so let's take it to pretty much that 2008, 2009 version of self. And whoo, all right. So let's see here. And this, I think it's going to actually open up a lot of windows towards folks as it pertains to what is it that I was also making at the time. So in 2008, I was making about $55,000 a year.
Okay, come on.
So I'm making $55,000 a year.
Okay.
I'm still trading. So like, how does this go? So you want me to talk about just like my income, or do you want me to also talk about my expenses?
So when you're so when you're saying, hey, look, I'm making 55,000 a year, what would you say your expenses are? And again, you're going to be such a abnormal client, or you're not going to hit us, right?
No, no,
Right, so
I am normal.
Right. So at 55,000 a year, right? What would you
Okay.
say your expenses would be? Right? What would that? We're not going to go down.
So easily off top, 30% of my budget is probably like being taken away by housing. You know?
Perfect.
Okay.
Yeah, so 30% of that is definitely being eaten up by housing, and I think we can add in like utilities and all that other stuff into that whole landscape, and then of course food. So pretty much, let's see here. Let's see if I can go back into time here.
All right. So I would say expenses. So or you got housing up there, your expenses, cars, right?
Yep. Mm-hmm.
All that's about 30%.
So I was making about $4,500 a month before taxes.
Okay.
And luckily I live in the state of Washington, where there is no state income tax. So it's just federal income tax. So let's say that I'm probably out of that 4583 that I was making after taxes. Let's say I'm making about roughly, let's say 4,100, 4,000 a month. Okay, and then let's say subtract my rent at the time, which was probably about $1,100, or no, it was about $1,100 to $1,300. So I'll take the high one. I'll say $1,300. Okay, and then my food, I tend to budget food pretty well, so I spend about roughly what, 200, 250 a month.
Perfect.
Oh, very nice.
Yeah, I like to cook, so and I come from a family where there was rice with every meal.
Come on.
Even if you order pizza, my grandfather made rice. Let's see here. I didn't have a car, so that I didn't have a car at the time.
Yeah.
So I didn't have to worry about auto. I didn't have to worry about insurance. Let's see here.
I mean that's
pretty much it. I was pretty much outside of just like going clubbing and stuff like that, entertainment. So entertainment probably took about maybe $900.
Right? Can't imagine.
So one thing,
Mark, stick with that image.
Right. So one thing, Mark, what you didn't touch on is, what about the saving side of it? What would you say? Okay, out of that 4,500 or so, where were you able to save on a monthly basis? Right. Because when I want the viewers to understand, we're doing this as a real world consultation, but I want you to understand, like, when I'm sitting down with a client, I want to know how much discretionary expenses do you have, right? What does your savings look like, right? Your debts, right? What tax bracket that you'll be in, that Abby will talk about, and then housing, and then and that's pretty the main 6 things. Did I name 6? Discretionary, savings, other debts, taxes, housing, and then anything that's miscellaneous. So those are the 6 areas that I want to look at when I want to assess a financial statement. Okay, when I'm looking at somebody's cash flow summary, I want to look at those 6 things, right, from a 10,000 square foot view, and then we can kind of dig down deep. So on that side, what would you say on a saving side that you're able to do?
So I always try to save. So one of the rules of thumb that I always had was I always wanted to save as much as, say, for example, what my highest expense was.
Gotcha.
So if housing was my highest expense, if it represented, let's say, 20 to roughly 30% of my entire income, I would try to also save about 20 to roughly 30% of my income, because you never know, incidentals, let's say, a check didn't clear by chance. I wanted to make sure that I was okay. Or if I had some type of miscellaneous expense, like for example, if I wanted to buy a TV or if something broke, or if I needed to move it over into investment. So I would say I'd save about roughly $1,000, between $900 to $1,000, maybe $1,100 a month, and then the rest would just be sitting there. And after I got to a point of, I think it was like in the second month of doing that, I started like slightly coming down, and then putting some of that money into my brokerage account.
Gotcha.
Yeah.
So I guess on that, Abby, from understanding that portion of his cash flow summary, what would you say from a tax standpoint? What tax bracket would he be in, or what would you look in a first time consultation from a tax perspective or a tax plan, right? What would that look like for you on an intro call, just on that cash flow summary that we went over there? What would you say?
Well, when we sit with the client, first thing we usually ask the client is, to tell us a little bit about themselves and what is their end goal looks like, right? In the taxation. I'm big on the idea of putting you at the biggest tax bracket. People are so afraid of being at a high tax bracket, but the goal is to get at a high tax bracket. Being at a high tax bracket doesn't necessarily mean you pay in that percentage of taxes. It means you're making that much money. So sitting with Mark, questions we'll be asking Mark: one, are you single? It makes a huge difference, right? If you're single or married, right? We need to,
yes.
Are you single? I mean, it's been 5 years. You got out of college. Are you single? Do you plan on getting married? Are you planning on purchasing a home? What does that end goal looks like? Okay, in the next 2 to 3 years, what are you looking to change tax wise? You are working in corporate, right? Are you looking to get a bonus? Are we looking at a end year bonus? How does being in the tax bracket, one of the biggest things people does not understand. So let's just say, right, he's in, let's say, tax bracket 21%. Well, before he gets to 21, the first 10,000 of his income, he's only taxed 10%. The next, right, amount, he's taxed at 12%. So then if we're looking at him and he's looking at a 21%, then our goal is going to be, okay, Mark, how can we get you to the lowest tax bracket, right? You are a W-2. Are you paying enough taxes, right? We're going to be looking at your W-4. Are you paying enough taxes? You're still young, you're single, you're making 55, you're making enough to actually take care of yourself, because we're thinking like IRS thinks.
Yep.
In IRS mind, you young, you have no children, you single, you make enough to take care of yourself.
Correct.
Gotcha.
Right. So then, so our goal is going to be more of, okay, you still young. What is the end goal for you? What does 5 years look like? Are you still going to be in the corporate world? Right. Are you looking at venturing to a business? Then we're going to be like, okay, are you looking to start retiring early? Do you have life insurance? Once we actually get to know you, because the goal is to be your solution. Right. So then we want to see, what is the problem? What kind of relationship do you have with money? You just said you save about $1,100 a month. For a single man making $55,000 a year, that's a big deal. That's very good. You only spending $200 to eat at that age.
Shout out to Louis St. Cyr. I stayed away, honestly, soccer fields and basketball courts.
Yeah, I mean, you're doing really good.
Peanut butter and jelly sandwiches when I didn't really feel like eating, or peanut butter and jelly sandwich with the oatmeal. I wasn't a huge Top Ramen fan. I feel like that phased out for me real quick after my freshman year in college.
Very good.
So that's what we're looking at.
We're looking at we like to look, and this is why I love budgeting, is because we're like to look at budgeting between 10-year, 5-year, and current, right? But we're not going to look at the current. We're going to look at the 10-year first. Because what happened is, if you start with the highest, which is the 10-year, then you're going to work our way down. So we're going to ask you, Mark, what is your 10-year goal? What is your 5-year goal? And even at your age, we're going to say, okay, you need a term life insurance. You need to see Christopher, because we want to create a journey for you. Even in taxation, there is a journey. Not just in financial, even in taxation. And my goal would be to get you at 37% tax bracket, meaning income, not necessarily paying that tax.
Yep. So that's huge, Abby. And I think that's a good point where I want people to understand where we're coming from in our show in our future, because we want to be teaching the things that she's talking about now, that I'll be teaching. We're going to be breaking that part down. So when I think about all the things that you're going over, this is, to me, it's a tax plan. So I guess what maybe for some of the viewers, I mean, you may say, okay, so when should I have this type of conversation? Because you listed a bunch of things that we should be taking into consideration. So when do you feel that somebody should actually sit down with a CPA or somebody that does taxes or tax, like, you gotta, when should that conversation happen? I mean, because I don't think people that are making 55,000, Mark's age 20, how old were you then, Mark?
I was 20 something.
20 something, right? I honestly don't think that most people has actually sat down with a professional and have a tax plan. Like, I don't think that's something that, okay, hey, how do we don't do that. So when do you feel somebody, is it an income level that somebody needs to have? Or when does somebody say, hey, look, I need to have not just a tax preparer, but when should I really establish a tax plan?
Can I be honest?
Yeah, go ahead, Mark.
I think the first time that I sat down with a CPA, the very, very first time that I sat down with a CPA was, I'll never forget this day. I was sitting there with the head of the firm, and he was always quarterly meeting with his CPA on behalf of business related stuff. And then the conversation kind of like shifted towards like personal. And I was like, oh, well, I can leave the room. And he was like, no. He was like, because like my personal is also somewhat tied to the business, and you help run the business. So you need to know these things just in case something goes on. And I was like, oh, okay. I didn't think that, really I needed to know these things on a personal level. And then the accountant, the CPA was like, that's your first mistake. Not thinking that you need to have a CPA just because of the fact that you're not running a business currently at the moment.
Yeah.
So I was like, and I think that when I first sat down and actually, like, of course, I'm 20 something and young and, okay, in one ear, out the other. All right. So it wasn't until later, like a few years later, I am an entrepreneur. Things are just getting off the ground and everything else. And I think I like ran into like something where it was like, oh man, made like, there was money made, but then now it's like, how do I make all this stuff work? Is this possible? Is this feasible? I'm also trying to like, prepare a startup to like go through the process of raising capital. So, and then I think that this happens for a lot of folks. They probably run into a CPA when they feel like they're in over their head, when they feel like they're going underwater. Mm-hmm. And I'm guilty of that. That was definitely me.
Yeah. I'm going to use I literally spoke to a prospect yesterday. She's 23 years old. She's making over $350,000 a year. Right. And she's making this amount of money, and she made it really fast. And because she made it really fast, and because she didn't have a relationship with money, she's in debt. She's broke. And now she has a high tax bill and doesn't know what to do. So that's when it clicked to her. Oh, I need to speak to a tax accountant. Oh, I need to speak to a CPA now. You late. The day you start your first job, you should have an accountant. The day you start your first job, the day you start that first business, you should actually have an accountant. I had literally asked a group of people why they choose to do their own taxes instead of hiring a professional. A lot of people say to me, growing up, they were told it was the athletes. It was people with a lot of money that had CPAs. It was, the entertainers had accountant, but individuals like them, they didn't really have. And that we have to get that mindset out.
So I grew up like learning how to do my taxes because my grandfather was just like, you need to learn how to do this process. Like, he was like, it's one thing, it's no problem. And he was always a huge proponent of it and saying that, there's nothing wrong in having people do these services for you. Mm-hmm. But if you don't understand what it is that they're doing, then he was like, now he always like had that kind of like built that mindset mentality in me. Never let somebody literally control, your fate. Exactly. And so again, it's like, I was a huge proponent of like, at one point in time of like, okay, yeah, I got to do this, I got to do that. And then after a while, it was just like, man, I don't really want to do this. I don't is there somebody out here that can do this? That way I can move on. And sure enough, it's like that's when I started hearing about it. I was always afraid of going to H&R Block and stuff like that, but just definitely like getting connected with the right CPA, the right tax strategist later on to like at least just cross my T's and dot my I's, just making sure that, okay, hey, did I do this correct? Did I have, having a second look, seeing things that they see because of the fact that, oh yeah, I clearly don't read tax code all year round. I'm not looking for what the latest and greatest is. So I started that pretty much around entrepreneurship time, because at that point in time, every dollar counted. Yep. Especially for a startup that like, hey, your, dollars going here, dollars going there. You know where your revenue can come from, but you don't know if it's coming tomorrow. So it's like, making sure that those things were intact. Those were huge for me.
Oh yeah. I mean, to answer Chris' question, tax planning essentially is part of saving money on taxes, right? So it's like anything in life. You have to plan ahead, right? So tax planning is literally the essential part of saving on taxes in order for you to build wealth. So when you think of tax planning, you want to think about what, if you are a business owner, is your entity structure is correct? If you are a W-2, do I have is my W-4 is completed correctly? Yeah, what are the items in those W-4s that I need to review? What are the tax credits and deduction that are that's assessment that is available for me? Those things are important for you to know. Estimated tax liability. Should I be paying quarterly taxes? Or should I wait till the end of the year? One of the biggest conceptions that I find, especially with small businesses, is that they don't think of taxation at all. So if you think of it as a W-2, the company you work for pays your taxes for you every biweekly. Well, even if you're a business owner, you're supposed to pay taxes as you make money.
Yeah.
Mm-hmm.
So the idea of paying taxes at the end of the year is literally a choice of yours. Every time you got paid, you were supposed to pay a portion of that money.
Yep,
just
absolutely.
like if you were in W-2. So estimated tax liability, reviewing eligibility when it comes to, plan implementing. So if you have a high tax liability, so what am I telling you? You need to sit with Christopher. You need to look at pre-tax contributions. You need to look at Roth IRA. You need to look at 401k. If you have a lower tax liability, then we need to talk about budgeting. That's literally the scope of planning. Absolutely. So if I'm looking at your financial report and it's July and I can project what your end year looks like, then we have 6 months to plan.
Let's do it.
So here's a question, because I hear that we hear financial plan a lot, right? Especially within the community, within the culture, and I think that a lot of folks don't really understand. Like, okay, hey, like you get it from one side, you get it from the other side. Okay, let's break it down a little bit, like, because I'm still in orientation. Hopefully, I'm being a good customer here. Hopefully, I'm being a good client. So you guys have said a lot that I'm probably going to be working with y'all on a more consistent basis.
Yeah.
But here's my big question as a first time client. So now that like I've just answered some of these questions, right? So what's next? Because you mentioned something about goals, and I do have goals. Like I definitely have a 10-year goal. I have a 10-year, a 5-year, and a 3-year. So what do we do with that?
Yeah, so I think on my side, from a financial side, that's one of the things, again, on our first call, I do want to understand your goals, right? So if somebody has debt, right, Mark, I'll understand, okay, what does a debt-free goal for you look like, right? Before I put together my own personal plan for you, as I'm going through your budget, as I'm going through your cash flow analysis, if you have debt, okay, what does your plan look like for you first, right? Then I'm able to do this. Okay, so I know you planned on getting out of debt in the next, say, 7 years, but maybe we can push that into the next 3 to 5 years, right? I want to understand, okay, when you want to retire. But again, for me personally, I don't necessarily believe in retirement per se, right? Because retirement, most people think about an age, right? Retirement is not an age, it's a number. Right, yeah. Because it's people who go chill out in Florida and just sit there and just soak in the sun and do nothing.
Right, they come to Florida. That's what they do.
right? For me, right, I never really, bought into the dream. Hey, look, I'm going to work to 65 or at a job to work to 65 to retire. I understood that even if I was still an engineer, that was my past career, that look, I wanted to be financially independent or financially free, financially secure. Those are all different things that we're going to break down on one of the next shows is what that looks like. Like, I want to be bulletproof. But see, that's a dollar amount, not necessarily an age. So I want to know what your mindset around it that is, right?
Okay.
And are you on track to say, okay, well, if you want to say, let's call it $1 million, right? Let's just keep it simple. That I don't think that's enough nowadays
to retire.
No, or it's
where
we're talking about back in the day. We're taking it back to when I was a young 23-year-old something
in the 90s. The 90s.
Yeah,
we were way in the 90s.
Yeah, or in Mississippi. You probably can do it with me, right, Abby?
Yeah, we're going to retire in Mississippi with that $1 million. Definitely not in Florida.
Right.
I hear that they got some nice houses over there by them golf courses in Mississippi. So
that's it. But again, so we want to understand that whether it's $1 million, $3 million, $5 million, $10 million, $100 million, we got to understand what is that number? What does that freedom number look like for you? And then we got to backtrack and say, well, how much money do you need to save per month? Right? What vehicles, and that's what, man, they've got so much stuff we're going to talk about. What vehicles do you need to use in order to get there?
Yeah.
Right? Yeah. Because there's so many different financial tools, but we got to understand where you are now, what tools you're going to use. But as your money progresses, right? As you hit $500,000, as you hit $1 million, as you hit $3 or $4 million, again, your financial tools are going to change because you're going to have access, right, to different types of people, different types of networks that can expand your network a lot quicker. So it doesn't have to be this 30-year type of timeline to where I can be financially independent by, right? We can do that sooner.
So let's bring it. So I was going to say, here I am at 23 years old.
Uh-huh.
So at 23 years old, now, mind you, there were some things that are going to pop up in my life in the next few years that are good things. And then there's some things that are, not so good things. So let's talk about them. So, for example, I'm getting ready, like so if we're talking about 2008, in 2009, 2010, I'm going to start a company. Like, so I'm going to start a company that's going to like literally suck the life out of me.
Yeah.
And then on top of that, in 2011, 2012, I'm going to be diagnosed with cancer. And when I was diagnosed with cancer, that was a lot. It was a huge financial burden on me because I didn't really have clearly when you're that young, you're not thinking about life insurance. Like, let's be honest, especially after you just came off of a financial crisis, you're not thinking about any type of life insurance. And so I definitely had major financial setbacks due to the fact of me going through treatment and everything else. Because insurance, wasn't fully quite as the best as I wanted it to. Let's just say this. I didn't have Fortune 500 health insurance at that time. Gotcha. So that definitely was an exorbitant amount of cost that definitely was eating at me. And then on top of that, the startup was also eating at me. So, those are the things in which that, if I was to go back in time, back to, let's say, 2008, 2007, one of the things that I wish that I could have done better was to say, okay, hey, I never really had that mindset, especially in a young 20-something, to plan for, of course, the expenses part, like, okay, hey, if, a check doesn't clear or something like that, by chance, it's like, I've always had that in my mind. What if a check doesn't clear? But the other part in my mindset was, all right, how do I plan for like those types of things where it's like you never know what could literally happen, like type of thing, where it's just like one good thing and one bad thing, both very, very expensive.
Yeah.
So if I could go back and say, okay, hey, well, what should have been the mindset there? Because I really think about it like that, that played a major role towards like, okay, me reshaping. But for somebody that, you that you currently have a clean bill of health and everything else, as well as you're thinking about starting up a company, especially if I'm coming to you, financial advisor, as well as tax strategist, what should be some of those conversations that we're having, like, so that way I can better prepare.
Well, first thing I would ask is if we're going to start the business structure is so important. I always tell my clients there's 3 people that need to be in your speed dial. You need to have an accountant, you need to have a financial advisor, and you need to have an attorney. Those
lawyer.
3 people should be in your speed dial. So at that age, and you wanting to start a business structure is going to be important. Understanding the aspect of business law and what type of entity is going to be best for you. It's got, even at that age too, it's important for you to actually have life insurance, right? So then that those things can adhere to the what ifs. Having a saving, having an emergency saving account. And those are the things too, like we're going to bring into this show, guys, teaching you guys how to budget, teaching you guys how to create an emergency saving account, teaching you guys the what ifs. If this happened, this is what you do. If that happens, this is what you do. So those first conversation is let's talk about the business structure. What is the goal for the business structure, right? And when it comes to the what ifs, okay, we need to make sure that you do have an emergency saving account. And even at that age, when my attorney literally told me, I asked my attorney, at what age should a person have a will? He said at the age 18.
Mm-hmm.
The minute you turn 18, you should have a will. At what age should you have life insurance? The day you left the hospital. The day as a baby you left the hospital. So so think about it that way, right? If the day I left the hospital, I have life insurance, right? And once I turn 18, I have a will. Anything that happens to me in between those lines, you are covered.
And I think I mean for me on the financial side, man, is when you think about the mindset you should have, it's like, how do you get the mindset? And the only way to get that mindset is you got to be around the right environment, right? Because I remember for me at 19, I didn't really start to understand money well until I was at Tuskegee University. I was driving from Tuskegee to Atlanta at least once a month, right? And I would go to different wealth conferences. So as I was getting around, right, a group of people to synergize with, that's when my mind started to expand more, right? So for you, if somebody's in age 22, 23, we have limited income. Of course, there's only so many ways that we can divide up that money. Does that make sense? Right. Yep. So we got to, number one, we have to protect the catastrophic, right? That's the one thing that I want to do. Right. The second thing is for me, the reason why I always say, man, budgeting sucks, because I want to make sure that we have a cash flowing system that budgets for us, that it keeps us on track automatically, that we don't have to think about it. Because if our system is tight, right, then our spending will take care of itself. But our savings will take care of itself. Our debt payoff will take care of itself if we have a system in place. And so that's where on one of our next shows, I'm going to show you guys a system to use to put in place that automatically budgets for you. Right, we got to do a good clean budget one time, but I want to make sure, number one, we have the 3 fundamental accounts or the 3 bucket system, right? Like Abby talked about, having an emergency fund, great, we need that. Well, how much money do you need in an emergency fund, right? How do we contribute to it? What type of portfolio can we use for an emergency fund account? Because yes, we can keep that money in the savings, right? We can keep that money, we can do it in an investment account, or we can use different types of portfolios to say, hey, look, we can protect our money, but still gain interest, while some of it may be able to be tax-free, right? With tax-free withdrawals, we want to make sure we have the bells and whistles that maximize those type of accounts, right? Number 2, the bucket I would have is a short-term account, right? To where I always tell people, right? I like my money like I like my food. I don't want my collard greens touching my mac and cheese, right? We gotta have
Wait, go back. You don't like what?
Oh Lord, here we go.
What's wrong with your mac and cheese touching your collard greens?
This just started a lot.
Wait,
I know this probably y'all.
Your mac and cheese can't touch your collard greens.
No, it needs to be in a separate compartment. Like I don't want the.
Is that a Mississippi thing?
Oh my gosh. This is next thing you know, we're going to be arguing about whose jollof rice is better, Nigerian names. That's not
let me know if that's a Mississippi thing, because the mac and cheese can't touch the collard greens.
I just can't do it, right? So, but in money, we want to have those separate buckets. So for that short-term account, we understand that, hey, look, this is money that I'm setting aside for this 2 to 5 plus years, to where if something happens unexpected, I have money there.
Yeah.
Right. And it's just not for an emergency, but these are for things that may happen. Like, again, Mark, you didn't know that was going to happen to you.
Yeah.
But see, if we're establishing a separate account now for those things that might happen in these next 3 to 5 years, as I'm building up my financial plan, then it's always there. Right. That third account is going to be our long-term, our wealth building accounts. All right. And that's going to be broken up to where maybe we're using a 401k, a Roth IRA, if we're using backdoors or mega backdoors. If you're a business owner, we may be using solos, right? There's so many things or tools that we can utilize in that wealth building account. But so if you have those 3 foundational guys, now that sets you up to where, okay, I can be comfortable where I'm at, but now I got to build upon it. Okay. And that's where we want to take you guys, is we're going to get complex, right? We're going to talk about advanced planning. We're going to do those things, but I want to make sure that foundation is set, right?
Definitely.
Yes. So, okay. So let's talk about some starter kits, right? Like, cause we're, I'm thinking about it in the sense of, all right, so we just had this sit down conversation and, I have this feeling that you're going to send me home with homework.
We're gonna have some homework.
And mind you, I just left college, so clearly.
You should be used to it.
Absolutely not. So, all right. So from both sides, right?
Mm-hmm.
From that first initial conversation, what should be the things that people look to gather before sitting down and talking to a financial advisor, or even also a tax strategist, like, because we talked about a lot, but it's nothing like, being able to see the details. So like, Chris, what would be some of the things that you would need to see from me? And then also Abby, what would be some of the things that you need to see from me? So that way you can get a much more holistic picture of what my world currently looks like. And then also, like, putting to and helping you put together the pieces of what my world can look like.
Gotcha. And I'm gonna be honest with you, Mark. When somebody comes to me, I really don't want them to have anything together, because I really want that first conversation to be an open and free-flowing conversation, so we can kind of set expectations, and I want to get to know the person. But secondly, the homework that I want to give is, number one, I want to have a detailed cash flow summary, okay, of going over your budget, like we talked about, going over how much money you're saving, how much money you have in debt. I just need like the minimum payment, the balance, the interest rates on all debts, right?
Okay.
I want to know what tax bracket. Well, she's going to talk about that tax bracket. Like Abby was go over that part, but I want to know the savings. The second thing, I want to know what type of accounts you have, right? What type of assets do you have right now? Where are they located, right? Do you have brokerage accounts? Do you have 401ks, Roth IRAs? What do you have when it comes to investment accounts? Real estate, I need to know those things. Okay. And then I would say after that, if you can have that basic stuff, those 2 things, a really good cash flow summary, and then your asset allocation, right, and your asset location, I'm perfect. So that way we can build on a good plan during our next meeting on how we can get there.
Our conversation is going to be a little bit similar, but our first conversation, we're going to play the role of HR, like human resource. So in our first conversation, we want to go over the W-4. So my first thought is, are you paying enough tax, right? So we're going to, the homework that I'm going to send you is to speak with your human resources at work if you are a W-2, right? We want to make sure that you are paying the right amount of taxation. If you are self-employed, small business, or even investor, there's a couple of things that I'm requesting from you. One, I would like to see your P&L. I would like to see your balance sheets. I need to see your financial reports, and I'd like to see the last 5 years of your financial reports. You'll be amazed what 5 years can show me. 5 years can show me how your relationship with money, how you are running this business. Are you running it like a hobby, or are you running it like a business that it's supposed to be? Because there is a difference. If you do have a business, the purpose of the business is to make money. So if it's not making money, it's not a business. You're just running a hobby. So we want to make sure that you are actually running a business. So my homework is to pull up those financial reports. I need a copy of those. I need a copy of the last 2 to 3 year tax return. I want to see how they've been doing right. I want to audit them. I want to review them. There's 3 audits that I do. One is your financial report audits that comes from either your bookkeeper or whoever's keeping your books. Hopefully it's not you or your grandma. keeping your books. So I hope not. So I asked for the financial report. I got to review the financial reports, P&L balance sheet. And there's something in QuickBooks that a lot of you guys don't use. QuickBooks actually will show you how your cash flow's been in the last 5 years. QuickBooks will show you where to budget. The business budget. There is such thing as a personal budget, and there is such thing as a business budget. So we have financial reports, we have W-4s, right? We have the last 3 years of your tax return. Those 3 audits, I review them. Then when you come back, then we actually sit down and create a plan. So for you guys, the homework that I would probably say that you guys would need for Chris and I is we would want to know, what are the problems that you guys, because we want to be the solution. What are the problems that you guys are having in a tax taxation point of view, in a financial point of view, because we want to be that solution for you guys.
Okay. All right. So that's a lot.
One more thing.
Go ahead.
I would say in statements. I don't know if I mentioned that, but all any financial statements that you have, even when it comes to life insurance, wills, trust, estate plan, anything dealing with financial that's paper, those statements we got to have, right?
Okay.
And again, that's a lot of homework for the first time, but how I structure my meetings, Mark, right, is I kind of break it up, right? So it doesn't seem so overwhelming, because that's the worst thing about working with a professional, right? Is, I got to feel like I got to get all these things together, and people end up rescheduling appointments and never come back. So my thing is, if you have one thing perfect, let's run with it. Or during our meeting, if I can help you gather that information, then let's do it together. Right? Let's do this exercise together, so I don't pour as many things onto my client and say, hey, let's do a data gathering during our next meeting, and we make it rock.
Yeah.
Okay, that's pretty dope. All right, so let's see here. All right, so interesting question, because since this is a very new show, and I'm probably sure that there's there's going to be some questions about this, because I'm sure that you guys get a plethora of questions, whether it's on the financial advisory side or on the tax side. So here's my question to you: what's going to make this show different from the other shows that that are out there that exist and everything else? What's going to be different on here on the Come Up series versus everybody else?
I think for me, what I wanted to have is I want real people, right? Real problems, so we can give real solutions. So what I want to encourage everybody to do, if they have questions on specific financial matters, I want them to submit them, Mark, right? So we can actually tackle those questions. Or if there's things that they've heard in the financial area, right? If they things they heard in the financial area, hey, Chris, I heard about, again, one of the biggest things online is cash flow banking or infinite banking or Bank of You. Okay, if you want to know about those things, okay, well, let us know and we can break that down. Or there's different ways that you can have a financial system to make sure that you're paying yourself. Okay, I want to know what those things are and what questions you have on any financial topic, and we can address those in our shows. So one way that you guys can do that is you can send an email to help@thecomeupseries.com.
.co.
Oh, it is .co. I thought that was a typo.
Mm-hmm.
So it is help@thecomeupseries.co. Okay. So if you send your questions to there, we'll make sure that we address them into the show. And then also, Abby and I, we're of course, will be able to be accessed on social media platforms. I'm assuming, Abby, LinkedIn, me, LinkedIn, or Instagram, right? We can always send us personal messages on that as well, so we can reach out to you guys, because we actually may have some of you guys on as guests, and we work through your situations together live. I think that.
Wait. Whoa. Time out. This is kind of revolutionary here. So what you're telling me is people can send something at help@thecomeupseries.co. So you can so we'll put that up there. So people can they can send an email to that. And so they can send you, for example, their questions, their concerns. And then on top of that, they can also, for example, send you what their current situation is. And what you're telling me is, so that way I'm making sure I'm getting this right, because okay. So what's going to happen is, after they send that email, you pretty much solve the problem live on the show.
Yes.
Live on the show. Yeah, that's what we want to do. I want to be able to
Yeah,
serve that live on the show.
Yes,
right?
we want to be the solution for you guys. So think of it that way, right? To sit with an accountant, you need about $250, right? An hour. You actually have a full-time accountant right here in the come up. To sit with a financial advisor, probably between $250 $500 just to answer your questions, not necessarily to put a portfolio together for you. You actually have a full-time financial advisor right here in the come up.
Yeah, so we're gonna do some crazy things on here. I think it's gonna be, right? It's gonna be pretty cool.
Yeah.
Wow, you guys are definitely throwing me for some loops here. So okay, I thought like the help was just like, hey, simple question,
No,
but
we got the
well,
cousin.
y'all solving. Okay, y'all out here solving problems. Okay,
Yeah, I think it's gonna be cool. And again, if some people don't want their information disclosed, we can always change their name, like they send us email addresses. Question to the email. But again, our thing is I want to make sure that people get their questions answered and use this time to really teach, right? To go into the details, to go into the pros and cons of different financial plans, of different financial strategies. Like we got to make sure that happens.
So Cassandra just said we can ask serious everyday life questions that will help us be successful and not charge us.
No,
I just want to make sure that that's correct. So that's what the show is going to do.
Yes, that's what the show was. That's what the show was going to do, right? For us to have it be an open forum, right, of us answering real questions, right? And then again,
say less.
Yeah, and Mark, it's going to be cool. Like I'm excited about it because there may be some questions that we may have to bring other experts on, right? Because again, one of the things that I know of is, again, biggest question is going to be estate plans, right? Wills, trusts, those type things. So I want to make sure that we bring on the proper parties, right, for estate planning to answer those questions. A lot of people ask me about trust and what type of trust they have, AB trust. Like we got to know those things. Okay, so we want to bring on the experts in that category. One of my favorite probably topics is not only just from an investment standpoint for insurance. Like I love the insurance game, but I also have one of my partners that'll probably end up being on the show with me, Mark. We're gonna break down everything on insurance, right?
Yeah.
I'm here for it.
Yeah. At what savings rate, if you're saving, okay, what makes sense? So it's gonna be pretty cool.
We're gonna bring in some enrolled agents and CPAs that handles, when you receive those letters from IRS and you don't know what to do with them.
Are you talking about the infamous red envelopes?
I mean, listen, it gets worse now. IRS knocks on doors now. They don't even send letters no more. IRS comes to your house.
Wow.
Yeah.
Wow.
So, how to respond to these letters. If you do actually have, a tax case that needs to, that you actually need an attorney to review, there are tax attorneys. So we're going to have some special guests for you guys.
Okay. So let's talk about this because, let's just make sure that we get some of the obvious stuff out of the way, right? So let's talk about because people are going to be sending you their information. So, they want to make sure that okay, hey, we want to make sure here at the Come Up series that everything is reputable and, of course, valid. So for the folks who are just now watching that are like, okay, where's the cap outside of the hat that Mark is wearing? Let's talk about Chris. Let's talk about your credentials, and then Abby, let's talk about your credentials. Let's go ahead. I mean, you kind of see it in Abby's background, but go ahead, Chris. Talk about it. Talk about it. Go ahead. We're gonna let you stunt for a second. I'm gonna sit down.
No, so again, I think for me, I've been in the business for 14 years, right? My background is engineering, then I transferred out of engineering to become an advisor. So, have my licenses from, SIE 6, 63, 26, 65, those licenses, so for me, it's really about not just the licensing part of it, but also the real world experience, right? Doing this for 14 years, I've seen a lot of things when it comes to financial planning, financial advising, and understanding how to think critically to get us out of situations that we shouldn't be in, or to make sure we have the proper structures to get us to the proper situation, right? So that's what we're really focused on, guys, and just giving us the, all the details that we need.
Yeah. My credentials are really easy. I have my BA in business management. I have my master's in accounting. I am not a CPA. I have a lot of CPA clients, but I'm not a CPA. Understand that taxation in a CPA, there's a lot of CPA that don't understand taxation. So there is a difference between a CPA and a tax strategist. There is a difference between a tax accountant and a tax preparer. And I will teach you guys all of this here in the come up. So those are my degrees. I've been doing this for over 10 years, and that's it.
Dope. So this is good. Look, I just want y'all to know, like, this is going to be a lot, like, and I'm really, really excited. Like, for the, biggest thing that I'm excited for is the fact that we're really stepping forward and helping solve yet again another problem. A lot of times, like, what we wanted to do in the beginning, in year one, we wanted to make financial literacy cool, entertaining, engaging, and understandable. Year two, we wanted to focus on like things as it pertains to like, all right, getting a little bit more well-rounded as it pertains to the discussions surrounding finance. Year three, we started talking about economic cycles and everything else. Year four, we've kind of branched out to business. Of course, we still talk about stock market and trading. And then, of course, having other dialogues around finance and, whatnot. But now it's like, this is different because of the fact that now we're like bringing it in full scope. If you're an investor / trader, you definitely are going to have taxes. You're definitely going to need to have a solid financial plan. If you're a person that works W-2, or even if you're, self-employed, whatever it is, again, comes back full circle. And also to hear that these things are truly like we're going out to the people to solve problems. So I'm pretty excited for what you guys are doing here. This is going to be an amazing show. I can't wait to see what y'all DMs look like for real.
Yeah, we're gonna catch up, right?
I mean, I think you just added to my DM realistically, because my DM just a little crazy.
Well, I mean, prepare yourselves. But yeah, for sure. Like, so this is going to be exciting. I can't wait to see exactly what this journey is. And so, thank you for the two of you guys for one, answering the call, for accepting the challenge and accepting the mission. And hey, that's just me now. So I'm gonna leave it to the two producers of, what is the name of the show again?
The Red Line.
The Red Line.
Okay. All right. All right. So I think that this is going to be pretty exciting. So, Chris, Abby, is there anything else that's needed from me? Because I feel like, I don't know. I feel like I've overstayed my welcome.
I think
You were a good client. You were a good client, Mark.
Yeah. So
Thank you.
We're
Chris and I are gonna make a billionaire out of you.
Well,
Let's go.
Coming soon.
Oh, right.
Coming soon.
Let's go.
Yeah, that's gonna be it. So, guys, I really appreciate everybody's time tonight, right? This is going to be an exciting show. Again, make sure you guys hit us up on social media. Make sure you use that email address. I'm sorry, email, the help@thecomeupseries.co to make sure you guys, so we can hear from you. And let's wrap it up, So I'm Christopher Bush.
I'm Abby Joseph. Don't forget to like, subscribe, and we'll see you guys next week.
Awesome.